this stage will be open and embedded banking, a differentiator in the Middle East. To provide his thoughts, joining with us is Matthias Biehl, API strategist at SoftwareAG.
Thank you. Yeah, I guess I take it away there. My name is Matthias, and I'm going to talk about the opportunity for differentiation via open and embedded banking. I want to start with an example. So here is Mike. Mike is a busy professional. He travels a lot, frequent flyer, and he likes to take care of his finances and look at his bank accounts and the transactions that are coming in. But he has several bank accounts, and it's quite a hassle in the short time that he has to check all of these different bank accounts on his mobile app. So his airline has provided a solution for him. Yeah, so it's his frequent flyer app that now has multi-banking capabilities. So he can log in to several of his bank accounts with just one click. So the way they have built it is actually, this is the airline loyalty app. And of course, this airline loyalty app has some airline APIs that it uses from the airline to make bookings, to look at his reservations and to see his points. But it also has the connection to banking APIs of all the different banks. So he can see all his bank accounts in one view. Now, the interesting thing here is not so much that there is multi-banking and several banks viewed together, but the interesting thing here is that it's the airline that is providing this financial services capability and this financial services app. It's not a bank, not a traditional player of the financial services industry, but an airline. Now, how is that possible? Right? We're used to the fact that financial services apps and products are provided by financial service players. Now it's possible with open and with embedded banking. So the value chain is very interesting here. There is a bank somewhere involved here, one or several banks, and those banks have the transactions, they have the data, they have the payment capability. And those capabilities are exposed to to players in the market via an API. They are wrapped as an API, and the very distinctive feature of an API is actually that it is integratable and composable. That's why I like to represent it as a building block, because now an API consumer, an airline, uses this API and builds apps with it. And the way they build app with it is the same way as they would, build a Lego figure out of Lego building blocks. They just put them together because they're integratable and composable. And out comes, after a very short time, the multi-banking app, right? And this multi-banking app is then given to end users like Mike. Okay, so that's the value chain that's made possible by open banking and by embedded banking. So the airline can now expose banking functionality via an API. Value flows in this value chain from right to left. So it's the data and capability of the bank that's the source of the value. It's then exposed to the airline. The airline adds value with this aggregation and multi-banking capability and delivers it to the end user. Now, the end user is the receiver of all of this value. And now there's the possibility for compensation, right? He can compensate now the airline, whether it's in monetary terms or in other terms, for the value he has received. And also the airline can compensate the bank. This is possible because here in this example, we have banking APIs, open banking APIs. And open banking is a concept that is now basically a topic and a phenomenon that we can see all around the world, right? You have heard this today before. There is a regulatory approach to open banking and a market-driven approach to open banking. In this world map that you see here, I have colored the countries that are taking a regulatory approach in green and the market-driven approach in yellow. So you can see there's both approaches are actually out there, and the concepts are pretty much the same, but the details differ, right? Who is the driver? Is it the regulator or is it the market? Legal frameworks, they are depending on the jurisdictions. API specification, they might be similar, but the details are different. Also, the scope of banking products is different from jurisdiction to jurisdiction. And also, very importantly, the timelines are different. The timelines for implementation. As you've heard, UK has implemented open banking several years ago. So we can learn from what they have learned by operating and implementing open banking. So we can also see that there are different starting points for different countries and for different banks in those countries. So a typical starting point is an internal banking API, right? And this internal banking API that might cover a lot of things that your mobile app, your banking app requires, and you don't offer this on a portal to your partners. But then there are regulatory APIs, right? That's the first step here at present, where we open up in terms of open banking or even open finance, those APIs that are mandatory for banks to open up where there's a regulation. There is, however, typically when there's a regulation, no possibility to really leverage that for business or at least to monetize those APIs. So what banks typically do is they offer premium APIs, and you've heard that as well in the context of open banking and open finance, and they offer the possibility, because they are not regulated, also to monetize those APIs. So they are typically very attractive for the banks. Now, this is not the only starting point or the only road to get to premium APIs. Some banks or some jurisdictions that don't have regulation, that are market-driven, they jump directly to the premium APIs. Now, what happens next after premium APIs are offered? Well, we can already look out into the future and we see a couple of developments there. One development is that in addition to those premium APIs, banks start to offer banking as a service and embedded banking. And here as well, there is the possibility to make money with those APIs. Also, there are some financial institutions that jump directly to the banking as a service and embedded banking proposition. But what's very interesting is that no matter where you are at and what your starting point is, you basically always have the same technology infrastructure that you're building your solutions with, right? You have some API infrastructure that you need there. Now, what are basically the dynamics that are playing out, no matter which starting point you have, where we want to understand how the future looks like for open banking and embedded banking. And there I have a very simple timeline, past, present, and future. We will look at what happened in the past, what is happening right now at present throughout the world, and then what is very likely to happen in the future for open and embedded banking. So let's start with the past. In the past, we were focused as a banking industry basically on efficiency and the mass market. We had a lot of different banking products. They come in all shapes and sizes. And what we did as a banking industry is we bundled them together as a mass market banking offer. This is very efficient to do these things. At present, now we observe open banking and open finance. So on a technological level, we take this mass market banking offer that was created for efficiency reasons, and we take it apart, right? Technologically, we unbundle this big mass market offer, and we unbundle it in the form of APIs. For example, you have a credit card API, checking account, saving account API. All this is an open banking API, right? You can do payments on each of those of these accounts. Now there's an extended scope of open banking, so to say, where you look at other banking products. So for example, as a retirement account, a trading account, mortgages and loans, and the big thing you call open finance. But the important thing is now we have a portfolio of APIs that unbundled the mass market banking offer. Now, if you look at this portfolio of some of the banks in markets that have done this previously, you can see that there is some APIs that are regulatory, that are required, where they are required to open up those APIs. And there is a number of APIs that we call premium APIs that they want to open up, right? These are market-driven, and you can combine those two approaches, whether it's regulatory and market-driven. Now, what's very interesting, I think, is that when you look at some of these portfolios of banks, that the majority of APIs in the portfolio is actually a premium API. So here is one bank that has structured the API so that they have four regulatory APIs and then 9 premium APIs. So the majority here is premium APIs. If I look at another bank, the difference is even bigger, right? They have structured the API so that their regulatory API is just one, and then they have more than 30 other premium APIs. Right? So we can see that premium APIs are very interesting to banks. And while the regulatory APIs can be a starting point or can have this initial spark to get started with opening up APIs, banks typically go beyond whatever is required, and they want to open up more and provide premium APIs. So on our timeline that I started with, we have seen so far that in the past we focused on efficiencies and we bundled banking products together into a big mass market banking offer. So when you had, for example, a mortgage, then you were very likely to also have a checking account in your credit card with exactly the same bank. And that was a result of the bundling. Now at present, we see actually an unbundling where this big mass market offer is taken apart with open banking and open finance. So we get kind of a pendulum swing where there was first bundling, now we see an unbundling. And when we look out into the future, what are we going to see there? We're probably going to see the pendulum swing back in the other way, and we're going to see a rebundling. So it's again a bundling, as we've seen in the past, but probably it's a very different type of bundling that we're going to see in the future. And this is enabled then by embedded banking. So what do I mean by a very different type of bundling or rebundling? Well, the reality right now, after we have introduced open banking or there were premium APIs being built, is this big portfolio of APIs that banks have, right? It's the financial services industry that has a large portfolio of APIs. Now, other industries are doing the same. They're also opening up. It's not only the banking sector. There's logistics, insurance, accounting, business management, communication, transportation. A lot of industries are opening up, and they're also building APIs. So it's these colored blocks are representing APIs from different industries. Now, the possibility there for an innovator is to rebundle not only those black APIs that represent the financial services industry, like we did in the past. We just bundled financial services products together into mass market products. Now we can take colored building blocks from other industries and bundle them together. And we'll get these niche market offers, embedded banking offers that are very specialized for a specific type of customer, very narrow, but are much more meaningful for this specific type of customer. And of course, there's a lot of rebundling opportunities, right? You can have so many different combinations of these APIs. All right. And all of these are embedded banking offers. Let's look at the couple of examples here. What could that be? So embedded banking for SMEs could be coming from an accounting software provider. Here's QuickBooks. QuickBooks provides accounting software for small businesses. And when you buy their software product, you also get a bank account and a credit card. That's possible because the banking product is now kind of rebundled with the software, right? And there is, of course, a bank underneath that provides that service. But the SME accounting solution consists of the accounting APIs, the core functionality that QuickBooks provides, but it also contains banking APIs, so you get a bank account together with your software. The same is true for taxi, the taxi business for Lyft drivers. So Lyft drivers have the Lyft driver app, where they see where their next customer comes from, and that's the taxi APIs that are provided by it. But now they can also receive their payments basically directly into their bank account and use this bank account directly with a credit card that's associated with it. So there is a banking functionality baked in to the Lyft driver app. And the same is true here. Another example for real estate owners, another very narrow sector, but real estate owners can get special types of banking products that also take care of their real estate valuations. So you have a real estate app consisting of real estate APIs providing those valuations of their real estate, and then banking APIs that do the typical banking stuff, but all bundled within this special type of app. These were a couple of examples for these premium APIs or embedded banking APIs, and the possibilities of how the market can evolve when those play out. So how do you build those premium APIs and embedded banking APIs? A couple of things we need to look at. Several dimensions, actually, we need to look at. Right? We need to look at the customer, we need to look at the product, and we need to look at how can we make money with those APIs. And it's kind of three-dimensional. The first one is the customer segment. We can look at the use cases or banking products and the monetization strategy. We can slice it basically in all three dimensions. So if we slice it by customer segments, you can look at what are actually the use cases for SMEs, what are the use cases for retail, for corporates and institutions, if I provide premium APIs. So this is one way of looking at a potential development of premium APIs. What are basically my customer segments? And one thing that I thought is really interesting from UK is that, well, if you think about open banking, you think, hey, open banking is primarily for the retail business. But in one of their publications here, they said that so many SMEs are actually using open banking. So it is, it can be quite interesting to look at these learnings from other countries to say which customer segment should I actually target and which has high demand for open banking solutions. Now, another way to segment basically this space for premium APIs is by banking product. I can look at my product portfolio that I have as a bank, and I can think about which of those products would be profitable to open up, right? So I have different use cases. Here I did some study where I looked at the public API portals of different banks, and I counted basically how many APIs or which type of API they are all providing. So typically banks provided credit card API, customer API, FX API. This was the premium API that's most commonly used by banks. Another very important way to segment this space, the design space for premium APIs, is the monetization strategy. And what can you do? You can either not monetize the API, maybe not so interesting. You can directly monetize the APIs, or you can indirectly monetize APIs, right? And I will look at a couple of examples here as well. So direct monetization is the principle that we know from other types of businesses. You want to have access to something, then you need to pay for it. Indirect monetization is a little bit more intricate. So let's look at indirect API monetization. How does this pattern actually work? You start with an existing banking product, right? So this product here represented by this package could be your bank account or FX trading functionality, foreign exchange trading. And these products today are already monetized or paid by your customers, right? So they are actually providing the revenue via fees. Now, with indirect monetization, you put an API, which could be a premium API, next to this product, okay? But the interesting thing is, and that can be counterintuitive, is that this API is not directly monetized. It is for free. So why would you do that? You do that because the API helps you sell the main product, the main FX or account product. And there are several ways of how the API can help you sell the main product and therefore monetize the API. All right, so let's look at a couple of examples for how an API can help you monetize. These patterns are, and there are several of them, would be API as a feature or API as a sales funnel. Those are the two that I want to look at here. But there are more, and we can discuss those other types of API monetization in a banking context separately. Just reach out to me. So the first pattern is that the API is a feature of the product. Right? A product like a bank account has several features, and there is an API, and the API is another feature of your product. Why is it another feature of the product? Because, for example, this API would allow a synchronization with the accounting software, something that's very interesting for SMEs. Right? So the API allows you to get all the transactions that happened in an account and take this information over into your accounting software or outgoing payments that you have already in your accounting software to push them into the banking system. Right? Accounting software providers are already making basically commercial with this or take this as a feature, their connectivity to banks, and so do banks. Right? So banks also say, hey, we have connectivity to some accounting software, and therefore our product, the SME bank account, is more valuable, and it's done via APIs, even though those APIs are not directly monetized. It's just that it gets the API provides a more interesting banking product. The second option for monetization is that the API helps to sell the product. The API is basically a funnel that helps you bring leads that are going to buy the product. So how does that work? For example, your product is a foreign exchange. You offer FX trading functionality via an API. So here is a real FX trading API that I found on one of the bank's websites. And now you can have other software providers that are using the FX trading API and therefore bring new business to the bank by using more FX trading and making it convenient and making it more convenient. So what I'm going to look at now is the last option for monetization, and that's direct monetization. You probably already know direct API monetization. In direct API monetization, that's what you have in banking as a service or embedded banking. There, the API is actually the product, right? They are identical. API and product are identical, and therefore I can directly monetize it. This is done, for example, by companies like Twilio or Stripe. So we have seen now several options for monetization, and this was several, and this is very important for creating premium APIs. What I want to give you on the way as key takeaways are actually that you need to move beyond compliance. So even though compliance is currently being built up in many countries in the Middle East, it's very important to already start thinking to move beyond compliance and focus on premium APIs, because here you have the possibility to monetize. Open banking is not an end in and of itself. You need to think about those rebundling opportunities and how you can leverage them for your bank. And then, well, you can already think about directly and indirectly monetized APIs and start brainstorming for your premium APIs. Thank you very much. Maybe you have a question.
Yes, Matthias. So I appreciate your points on the different how banks in Middle East can differentiate themselves in the open banking journey. So from your experience of working in other parts of the world, which industries do you see favoring or adopting the embedded banking more?
So I think there is a whole range of industries that can profit from embedded banking, right? So examples we have seen are software industry, right? So the accounting software provider takes embedded banking as an additional revenue channel, right? So when QuickBooks or Intuit, who owns QuickBooks, integrates embedded banking into their core product, for them, this is an additional revenue stream that comes in via bank fees and transaction fees that occur on these accounts. So it's typically software-driven industries, and it can be that there are, at the core software industries, or they are from another industry, but they have a very like a focus on software. They take a software perspective to an industry. Examples are, a Tesla takes a computer science or a technology perspective into the area or the industry of cars and automotive.
Right.
So
Right.
yeah, that would be one of the things to
Great.
consider.
Okay, right. Yeah, great. Thanks a lot. Thanks for joining us at Apidays Dubai and Middle East and sharing your views. Thank you.